Anyway, he's the number one ranked realtor in Indianapolis, board of realtors for Central Indiana, rental transactions. He's on track to close over 280 deals this year, which is huge for anybody who knows anything about closing transactions in real estate. Dan has 15 years of real estate experience in Indianapolis, Carmel, Fishers, and Zionsville markets. He specializes in assisting investors and private landlords purchase, lease, and manage rental properties. I love talking real estate. Welcome to the show, Dan Baldini.
Me today.
Hey, so let me ask you this, because you obviously have this background with rental and investments, and how is the Indy rental market performing for your clients and for your landlords?
You know, the Indy rental market has been performing phenomenally well, and it's been on a tear track for about 5 years now, since the subprime imploded on the mortgage industry in 2007. In fact, year to date, most of the rental markets for rental rates are up 8 to 10% for landlords. It's almost shooting fish in a barrel. The landlords are having fun.
Finally, again, right? They're having fun again, because it's been a while. Now, let me ask you this. Here's what I want to do. I want to take about 30 seconds, and we had the pleasure of interviewing Donald Trump a while back. And like I said, this is several months old, but I want you to listen to what he says, and I want to get your feedback on it.
Sure.
Well, the good news is there's no money around, so you're not going to have a lot of overbuilding like you do in the housing industry. You know, they overbuilt 2 years ago, and now they're sort of getting rid, and you can make lots of good deals. If you have money today, you can make lots of good deals. The fact is, this is a great time to go buy a house, maybe even wait 3 or 4 months.
Okay, so obviously I know what your answer is since you kind of already told us it's a great time. But
Yep.
What is your take on the real estate market? Is it still booming right now? Is it going to be booming for a while? We have this crazy go ahead.
It will be. Actually, our projections, we're advising our clients, whether they're investors or what we call our sell lords, which are folks who want to try to sell their home, but because of maybe a down real estate sales market can't, and they're transferring their properties over to rental properties for a 1, 2, or 3 cycle period. They're making money hand over fist. There is such a rental demand from tenants. The rental market has grown, at least in the Indianapolis area, the Carmel, the Zionsville, Fishers, any of the 9-county area in central Indiana. There is more rental demand than there is supply, and it's pure and simple economics 101. In fact, we're experiencing and we're expecting that growth trend to continue for the next 7 to 10 years. And most of that is due to the fact that we have become a nation of renters. The ownership lure or the ownership allure for folks has really gone away. They're realizing that it's almost as risky to own a property as an owner-occupied property owner, more risky than even being a renter. So landlords have every card in their hand, and they're taking full advantage of it.
Okay, so let me do this. I got to take a quick commercial break, and then we're going to come back. We're talking to Dan Baldini about the real estate market, and specifically in Indianapolis, but we're going to take a short break. Bear with me, Dan. Okay, and we're back. We're talking to Dan Baldini. He's the number 1 ranked realtor in Indianapolis, board of realtors for Central Indiana. Anyway, he's the kind of guy that if you have property, he can help you invest it, use it, rent it. He works with landlords and investors from all over. And let me ask you this. Okay, so you're getting some people who have never been landlords before, and because maybe they can't get their price right now, they're dipping a cautious toe into becoming a landlord for the first time.
They are. They're actually not even dipping quite a cautious toe. They're reading about it enough and realizing that it is turning their property that they once occupied it for themselves or with their family into an investment property is akin to purchasing a financial option in the futures markets. They're hoping that by putting a renter in there for a year or 2 or 3, that they can wait out the market. And the Indianapolis market overall is doing very well in the sales market. However, our prices have not returned back to where most of these folks are above water or above it where they're not going to vaporize their equity. So they change their property into an investment property. they're realizing very, very quickly that, number one, they can cash flow the property quite nicely every month. Number two, if it's professionally managed, they can manage the inherent risk of being a landlord and not lose sleep and not have to worry about the toilet overflowing on a weekend or the water heater going out, et cetera, et cetera. What a lot of our landlords are finding out is it's a wonderful way to transfer that asset on their personal balance sheet from a personal home, and it's a way to build wealth. And
right.
They have figured out, they end up, most of our property clients, once they have figured out, wow, they actually have a tax write-off for a tax shelter each year, their bank account grows from the cash flow they receive monthly from the tenant, and their mortgage is being paid down because they're further down their amortization schedule, and they're getting 1 to 2 to 3% price appreciation in the market overall without any capital gains. A lot of our clients end up just leaving that property on their personal balance sheet forever. And they create a real estate category no different than they have a 401k at their job, no different than they have a Roth IRA or any other type of asset. And they realize that when it's professionally managed and when they're being professionally represented on the leasing side, it is a very mitigated risk on that asset to the point where their return on their investment and or their return on their equity is equal to or above what they're getting in their 401k accounts. And so
and they have a little bit more flexibility than they would in a 401.
Absolutely. We've even changed over some of our landlords who have realized the extensive returns that they can get on their residential property and are starting to do self-directed IRAs.
Oh, that's smart.
And using their IRA money.
Okay, so we only got a couple of minutes. We got so quickly give us one or two of the blunders or pitfalls investors and landlords commonly experience that you talked about being professionally managed. So give us a couple of landmines that people should avoid.
Oh boy. First of all, if the biggest landmine landlords get into and blows up their property, blows up their cash flow, is they try to do it themselves if they don't know what they're doing. They have a horribly written lease agreement that a small claims court judge will just shred or a tenant will take advantage of. Make sure you have the correct lease document. Secondly is make sure that either your realtor or yourself knows how to do a competent and thorough background check on the tenants. And, folks, it's more than just getting a copy of their credit report and a copy of their photo ID. It's paramount to avoid those problems. The reason why some of our investors keep re-renting with us is we don't let the bad apples in to begin with. Once you have good tenants in place, the risk level goes tremendously lower. Your cash flows get more predictable, and your overall success of renting that property becomes more predictable and confident. It's just that simple.
Hey, Dan, thanks so much for being on the show. Guys, if you have real estate questions, go to Dan, BALDINI.com. That's DanBaldini.com. Dan, thanks so much for being on the show today.
My pleasure. Thank you.
You bet.